Marcus Severus and Justin Turner.
Hey, buddy, how are you?
I'm good. Yourself?
Good.
Good. Yeah. It's been another week.
Yeah.
It's been 2 weeks.
Has it been 2 weeks?
It's been 2 weeks. Yeah. And I just want to start off the podcast /TV show by asking Marcus what is with his shirt, because before the episode aired, I wanted to ask him, and then he said, let's just wait until we're on air. So Marcus, what is going on with the shirt?
Thanks for asking, Justin. So I got this shirt in Florence, and I thought it was a good shirt to wear today because we've been saying that there's going to be 3 interest rate hikes from the Bank of Canada.
Mm-hmm.
I've been saying that there's 3 interest rate hikes, and there's 3 little bears on the shirt. And I think that if there's more than 3 interest rate hikes, we'll enter into a bear market.
So if this specific interest rate hike was one of those bears,
each one of the bears is 75 basis points.
No, I know that, but I'm saying
Each one is 25
basis points. But what bear is yesterday's interest rate hike? And by the way, we're recording this on Thursday, March 3rd.
Maybe this one down here with the scissors. This one here, because he's just starting to trim a little bit, and then the other guy's getting ready. But it's like a bunch of spring bears. They're all like kind of getting their things ready in the garden.
Me being a fashionista myself, where is that shirt, Marcus? That is a limited edition Gucci shirt. Is that right?
How do you know that? Yeah. So there's this place in Florence called the Gucci Garden. It's pretty cool. It's like there's like a restaurant and there's like a Gucci museum, and they have clothes that they only sell at this place. And I saw it and it just looked so whimsical. And I love whimsical.
It is very whimsical.
Yeah. So, I mean, I figured I would pick one up. And then you never know when it can come in handy. It's been made fun of many times. I wore it to a Christmas party and somebody was like, this isn't an ugly Christmas party. Ugly sweater Christmas party.
From when I saw it from far away for the first time today, I thought it was a Christmas party.
It's more spring than Christmas. Like, look at all the flowers on it. These flowers don't bloom in Christmas unless you live in, like, I don't know, somewhere tropical or like equatorial.
Equatorial. Is that a word?
Yeah.
Interesting. A lot has happened in the past week.
Yes.
2 weeks, sorry. Last time we recorded the podcast, we were talking about what would possibly happen if this Ukraine-Russia situation escalated, which it has, unfortunately.
I'll just say that I posted up on the Instagram over the last couple of days a couple of clips from Marcus pretty much predicting how things would play out over the last couple of weeks. And it's pretty much to a T.
Yeah.
Unfortunate, though, still.
It is very unfortunate.
You know what's weird is, like, we really can't figure out what Putin's motivation is, but we can anticipate what the economic result of that motivation is going to be for kind of the Russian economy, no brainer. Mm-hmm. But our economy and the American economy, we kind of see how it's going to impact us, right? Like, this week's been an interesting week because we had the Federal Reserve Chairman Powell speak. We had the Bank of Canada speak and raise interest rates by 25 basis points. Mm-hmm. A lot of people worried about the kind of impending interest rate hikes that are coming. Powell intimated to the market and spoke to the fact that he sees a 25 basis point increase in March for the Federal Reserve. A lot of economists were predicting a 50 basis point increase. So he's kind of already pulling that back. And I think it's important to understand what a Federal Reserve or a central bank can actually influence, right? Like, domestically, if Canada increases interest rates, what we're really affecting change on is the supply-demand relationship of money, right? So people are going to borrow less, people are going to save more if interest rates increase. I think the underlying problem is that the inflationary shocks that we're seeing in the marketplace aren't necessarily a result of, no longer are a result of increased borrowing and decreased savings. They're more of a kind of specific commodity and transportation issues. Like one of the things that we posted on the Instagram account is a little while ago, we were talking about inflation. And I said that it might sound conspiratorial, but it seemed to me, based on the profit numbers that a lot of the major shipping companies were posting, or like towards the end of the pandemic, that they were artificially increasing shipping costs, and that was having a pronounced impact on the price of goods that people were buying. That is inflationary, but it is artificially inflating the price of things, saying, hey, it's the pandemic and the pandemic's over. Things are expensive because lots of people want them. Well, sure, things are expensive because lots of people want them, but things are also more expensive if you charge people more to get them to a destination and you cite the pandemic. So a lot of people used the pandemic and kind of general inflationary pressure as a bit of an excuse to increase profits. And we saw Biden in the address that he made speak specifically to an investigation that he wants to do into shipping companies and them increasing costs. So there's a lot of things here at play. I think we cannot overestimate how concerned the consumer is with inflation right now. And the consumer is very, very concerned about the inflationary numbers.
Mm-hmm.
As we're saying that, the consumer is also equally concerned about being able to have enough share of wallet to service debt. Angus Reid did a poll recently, and more than 50% of Canadians are already stretched thin. So what happens if interest rates rise further? We keep referencing Stephen Poloz, the former governor or former head of our central bank here, who said that monetary policy is different now than it was 5, 10, 15 years ago because of how much debt the Canadian consumer has. And a small increase in interest rates has a more dramatic increase, more dramatic impact on the economy. Mm-hmm. That's important. Like these things are important factors to consider. So it's almost like you got to balance people's fear of their debt and the price of that debt increasing against people's fear of inflation. And it's the job of our central bank to keep things stable. Mm-hmm. And I mentioned to you earlier, I was like, it seems a little bit like, I mean, to say it simply, it's like closing the barn doors before the horses leave. You know that saying?
I do, like, as of today.
Inflation, we have runaway inflation numbers.
Yeah,
right?
Yeah.
It's easy to say that, like, so if you increase interest rates, the effect on the economy happens 12, 18 months down the road. It doesn't happen immediately.
Yeah, I know.
So it's easy to say, well, we're closing the barn doors after the horses left. But in fact, the horses weren't even in that barn.
Yeah, they were miles down the road.
No. The horses were in a different barn.
Yeah.
That barn, closing those doors, isn't going to bring the horses back, isn't going to scare the horses to come back. Mm-hmm. Because those horses were in a barn that housed oil or wheat or transportation costs. Those are the things that are rapidly increasing in price. Mm-hmm. And increasing our overnight rate is not going to reduce the price of oil. It's going to just take a bigger bite out of people's wallets. Mm-hmm. It's going to, like any time a central bank acts, it's going to have an effect on kind of borrowing, obviously, which will slow the economy down, but it's going to put consumers in more of a pinch. Right. So central bank governors are keenly aware of this. Governments are keenly aware of this. You take more of a bite out of people's wallets, the economy is going to slow down. Mm-hmm. But you're going to put people in a really tough spot, right?
Yeah.
People are tight right now for cash. I think the borrowing has kind of come to an end. We'll see that soon enough in our kind of year-over-year, month-over-month numbers. And what we need to address is increasing oil prices, increasing commodity prices, right? And I think what one thing that this crisis, this war in the Ukraine has taught us is that energy policy affects foreign policy, and it affects the way countries in the world behave, right? So like, it is amazing that we have a climate change accord in Paris. It is amazing that G7 nations and developed nations around the world, most of them, are committing to reduce their impact on the economy by reducing their reliance on fossil fuels. It is not so amazing when strategically that forces those countries to rely on, let's call them like bad actors, read Russia, Saudi Arabia, China, more. It strengthens those economies. I gave you like an infographic. You want to put that up? This is cool. Okay, look at this. Canada produces so much oil. I think we are like number 5 in the world in oil production. We produce more oil than we could ever use, but we still import oil, massive amounts of oil, on a daily basis from, and you can't see the flags there, but from Saudi Arabia. I mean, Norway and Great Britain are up there, which is fantastic. But, Saudi Arabia, and look at Russia.
Yeah.
Right? Russia's the number 2 net exporter to us. We import, number 2 import of oil that we get is from Russia. So all that does is it empowers and it enriches those governments, those economies, and strengthens them.
But why do you think they do that? Like, what's the meaning behind that? Like, what's the purpose?
Our energy policy in Canada is it's the whole NIMBY thing, not in my backyard.
Right.
We don't want to have a pipeline. Canada doesn't want to have a pipeline, right? Because it'll impact our environment. Mm-hmm. Well, without a pipeline, we can't get oil efficiently to refineries to refine it. Mm-hmm. And it's cheaper for us to bring in oil from other countries to refine it and then send it to the States. We send like most of our oil to the United States.
Right.
But to get the oil to Ontario and Quebec, where we really need it, from the West Coast, it's cheaper for us to bring it in. It comes down the St. Lawrence, man.
Yeah.
So, listen, there is no magic cure-all for this, but we have to understand that, like, as much as, carbon credits and climate change are important, there are repercussions to every decision that we make, and we create instability in the world when we are overly reliant on kind of bad actors.
Yeah.
We saw it even in this thing as it's playing out, right? Like, Germany is now going to move towards nuclear energy because they don't want to be as reliant on Russia for gas and oil. We're going to start seeing a shift. I really believe we're going to start seeing a shift in how governments and economies rely on others for their energy stability.
Right.
Listen, guys, let's take a break, and then we'll get back with it. We got a fan caller came in, so I have that for us to play. And they left us a message. They left a question for us to answer.
I was actually just going to say, in the form of our old good friend, my back's right up against the wall here, Marcus, so let's take a quick break.
Toronto, defined by its people. Hardworking, dependable, generous, accepting, beautiful. People who need help sometimes. But when we need help the most, our banks say no. Cannect helps homeowners borrow for less. Not just today, but forever. Your home loan approved online in seconds. Funded in 24 hours. Then, unbiased lending advice to get you back on track. The way it should be. I'm Marcus from Cannect. Let's make money count.
Matt, do we have a caller?
We do.
Bring him in.
Hey, how's it going? I'm a long-time listener of your podcast, doing a great job. Today, I just wanted to get in touch and ask about the prime rate. Everybody's talking about it, and I'm kind of worried about the direction of inflation. So, just wondering what you guys think with the recent increase in the prime rate, if you think that's going to slow down this run of inflation. Let me know. Thank you.
I believe that the thing that is going to slow down the run of inflation the most is the way that inflation data is gathered and presented. It's a year-over-year number. If you have a bad number one year and then a better number afterwards, that number is even more gangbusters because year over year, the percentage increase is higher.
Right.
I believe that the next thing that would be able to impact these inflationary numbers would be to see some of these shipping companies reduce their profit levels. I believe that we're still going to see instability in oil prices and wheat prices, and it's going to be a problem. I also believe that if you look at the monetary policy report that the Bank of Canada issued, which I know that you did not, but if you look at it, you'll see they list out what they believe to be the factors influencing the inflationary numbers, and they're high for sure. But the final factor was housing prices and borrowing.
Right.
And like I said, I mean, we saw this happen before. Like there's been instances where interest rate hikes occurred, and during those instances, when you look back, the interest rate hikes didn't slow the housing market down as much as policy changes did, like the introduction of the stress test. 3 25 basis point increases is going to be more of a psychological, more of a pat on the head. The Bank of Canada understands we're worried about inflation too. It's going to be less of a dramatic impact on inflationary numbers. But simultaneously, the year-over-year numbers for inflation are going to fall. And the Canadian consumer will see that, and they will believe that the Bank of Canada is in charge. They're going to believe that the government of Canada has their back. And that is all that is required in this situation.
Right.
So to the caller, what I would say is there is so much global uncertainty. The playbook has not been written, but a rapid increase in the overnight rate, the only real purpose that it would, two purposes. Purpose number one, psychologically, the Canadian consumer will feel as though they're protected. Point number two, the Bank of Canada will have ammunition if we enter into a bear market, which could happen. Could happen because of the massive increase in the price of oil. There are many reasons why we could enter into a bear market. Equities in the US are very likely to turn negative. That changes the psychology of the American consumer. You change the psychology of the American consumer, and we're already seeing some numbers where it does look like it's changing. You better believe it's going to affect Canada. So our economy is in a tenuous position. We can handle 75 basis points. I don't think we can handle much more. I think that's going to come to light in July and August. And we'll be sitting around saying like, oh, geez, remember when we thought that like some economists were predicting 25 basis point increases? It's 2%. That ain't happening. I'll eat this sweater if interest rates go up.
Can we get that on? I guess we do have that on video.
It's recorded.
What else is it on, man?
I would love to see. I know it's not going to happen too.
You know what, man? Can I tell you something?
What?
If this had enough butter and mayonnaise on it, you'd eat it.
Marcus, I think you raised a good point there. You talked about
my dad is going to say, "Why are you so mean to Justin?" After hearing that, do you want to cut that? Cut that out.
We might. So you raised a good point there, Marcus, about the stress test. Do you see the stress test going up anytime, or what's the what do you hear?
No.
Because
Listen,
that was the biggest impact on people getting into the market, I think, over the last year.
Just like inflation is a component of multiple supply-demand relationships at once and cannot be solved by simply affecting change in the borrower-saver relationship. That's just one component of the supply-demand chain. The housing prices are based upon multiple supply-demand relationships. So one of those relationships is, hey, there is not enough supply of housing, right? Like in Ontario, like we got an issue, right? Have environmental issue where we've got a green belt and we've got areas that you can't build. Listen, we're building condos right now. We got 4 condo development projects going on right now.
Mm-hmm.
You know what's affecting them? The slowness of the city of Toronto.
Right.
So we're willing to put units online. We've got like areas that we know we can build. We've got buildings that are at some stage of approval, but the city of Toronto is slowing it down. We need the Canadians, generally speaking, need access to housing supply. And if you have consistent demand and supply is shrinking, prices go up.
Mm-hmm.
Right? Like, and we're going to add in massive amounts of immigration, which is going to be great for the economy, which is going to be great for every part of the Canadian economy. Some parts will be affected negatively, but for the most part, it's going to be great. We don't have enough houses for these people.
Mm-hmm.
Where are we going to put them? And then we're going to complain that rent prices are going up and condo prices are going up and housing prices have reached all-time highs. And we're going to try to change all of that just by affecting change in one part of the dynamic, just the overnight rate. Listen, the Bank of Canada can't fix everything. Monetary policy cannot change the price of oil. Monetary policy cannot change the price of houses. Other factors are at play here. So we can't all just go to bed at night and rest our head on the pillow and say, well, we got that 25 basis point rate increase. There we go. Listen, this comes down to one thing. You're listening to our podcast or you're watching us on TV and you're interested in what you should do with your mortgage. Stay variable. Unless there is some really, again, risk propensity has a lot to do with it. Being able to sleep at night with a fixed rate over a variable rate. Like my mom would never be able to take a variable rate. Certain people just can't, right? So call and we can help you work through that. But understand that we're in a situation right now where last week the Government of Canada bond yields dropped almost 50 basis points. 5-year fixed rates haven't changed yet.
No, the bank's just eating that up.
They're going to change. So right now there's more fat baked into that spread than there has been in a little while.
Mm-hmm.
So there's going to be downward pressure on fixed rates. If you want to get a fixed rate, wait a little bit. If you want to get a variable rate, you will be happy for the next 5 years because things can't move as fast as they used to right now. Runaway inflation is going to be gone as a story within 9 months. And the story will then become either if there's been too many interest rate increases, oh, geez, the economy's fallen flat on its face. We need to stimulate it by pulling back some of these. Or if there's been just enough, hey, the economy's kind of humming along right now. And it's a really careful balance. And the way, if you're a central banker, the side you want to err on is the economy's humming along. You want to do everything to avoid us slipping back into a recession. The only tool they're going to have is to buy more, to stimulate the economy, to drop interest rates. You don't want to be in that constant limbo. And like I said, interest rates and the way you can change the overnight rate is not an immediate impact, right? It's 12 months down the road impact. You look so worried.
I was thinking about the fact that you should have introduced your shirt by saying it was like the porridge, like the economy is a little too hot.
That's a good one, like Goldilocks.
Yeah, but then there's the economy that's just right, which is the exact amount of interest rate hikes that we're looking for.
The Goldilocks economy. I mean, I guess what a central banker.
We just found an episode name.
I think
the Goldilocks economy.
Yeah, I think what the central bankers are always looking for is to keep the economy of porridge at the perfect temperature.
Yeah.
So
no one likes a hot porridge.
Yeah, so that people are eating just enough. We don't want them eating too much. We don't want them not eating.
Or burning their mouth.
Right. We want that porridge to be the perfect temperature.
What is that, the baby bear temperature?
I thought it was mama bear because baby bear is too cold, I think. But I could be wrong.
I don't know, actually.
Yeah, we'll look
That's
it
not
up.
in my kids' bedtime reading material, actually.
It's either mama bear or baby bear.
Hey, great show today.
We did have a good show.
Yeah. You want to keep chatting offline?
A lot of information.
Or on the podcast and not on the TV show?
Yeah. We call it the podcast after dark.
I don't know if I'm sold on that name.
No?
No, but we just did that because we were doing it and we had a drink the last time.
Right. Well, I didn't have a drink.
All right, man. I had a drink.
I did have a cigarette.
I had a drink.
Yeah, it was tasty. But
Hey, listen. I mean, the number one thing we should be telling people is Cannect, unbiased advice. The same way we speak unbiased about what's going on in the economy, we're going to talk to you in an unbiased way about what you should do with your mortgage.
Mhm.
And if you're in a tough situation, like a lot of people are right now, you need that. You need somebody that has the information, that knows how to deal in this marketplace, and that is able to provide you with a solution to whatever you're in.
That's
and the
on you.
best and the first step to that is just go on the website, enter in your address, boom, you can download an approval. You can see what's available to you. And then if you want to, you can speak to someone at Cannect, and you can speak to them knowing that whoever you're speaking to is on salary. And they make no more money or no less money by dealing with you. They just want to help. And they're all great people. Most of them are way better than Justin. Way better
I
than
am
Justin.
the best. Marcus, my back's against the wall. We're gonna end the TV show and we're gonna carry this on into the podcast. If you want to stick around, head to our website. Matt will tell you all the details.
Canadian mortgage rules have changed. It's now harder than ever to borrow money. But I'm no banker. I'm a homeowner, a business owner, and a best friend. And when we needed money most, our bank said no. Thankfully, I found Cannect. With just a few clicks, I was able to use a bit of the dream I built to help start a brand new one.
Mom, what do you think? Oh my god. Okay, Dad, I need you to actually fix this hat.
How about his son?
Oh, he's fine.